All right, welcome back. Let's take a look at Netflix today. They had their first ever box office win with K-pop Demon Hunters. We bring it up because the stock's been red hot. We have ownership on the desk, and Shannon is the only person on this desk who has seen it, which means you get the first comment. Even though you don't own it, you're in the mix. You helped give them their first ever box office win.
A combination of great animation, a fantastic soundtrack, but most importantly, releasing this into the summertime where this demographic was thirsting for new content. And so if you take the combination of new stars that they brought in, but this is a great example, Scott, of the type of content that Netflix is willing to try out for a very low budget and then be able to quickly jump to putting this in the box office and taking advantage of the sing-along aspects of this movie. I think this is indicative of their continued innovation in terms of their business model.
You know, Weiss, I think Shannon makes a good point. They have the financial wherewithal to take risks, if you will, where others might not be willing to take the same kinds of risks. That's one of the reasons why investors like you continue to gravitate towards this name.
Yeah, and the other reason is they constantly add to their value proposition. If you go back to BlackBerry was a great technology when it came out, but it was one and done. Netflix, whether it's their live, houses or places that they're building in various cities and will be expanding on, so that you have that real live interaction. It's just branding, and they continue to brand, and they continue to do quite well. Now, the release in the theaters and prior releases, they weren't really for revenue. They make plenty of revenue with their core business. It was to continue to get their name out there, not only to attract subscribers, but also to retain them. So it just continues to be great management, executing extraordinarily well.
Joe?
Well said by both Shannon and Steve. That's exactly what this is. This is an attempt to grow subscribers in an area that maybe they feel as though they do not currently have the interest on the part of these potential customers. And for a very nominal amount, and what did it earn? About 18 or 20 million this weekend. They got back 18 to 20 million on this, and they got the eyeballs. I think it's excellent. I think the stock is pulled back to a level here around the 100-day moving average where you're inarguably going to find some longer-term support. They are winning in terms of streaming. And look, we are in a world that continues to go more and more towards streaming. Anyone who's gone to buy a TV recently, the first question they'll ask you is, do you need anything other than a smart TV and streaming capability? Are you going to go into a traditional cable provider or not? And that's a real question, because right now, the younger generation, the answer to that is no. Just give me the TV. I'm going to plug it in. If I have wireless, I have all I need with the streaming apps.
I mean, I think they're reaching. They've got a long way to reach some of the eyeballs you're talking about them not reaching. You go watch Squid Game.
They're making a very clear.
All right, pal.
They're making a very clear attempt to go out and get some of the eyeballs that they currently don't have, and they're doing it through the theaters. Amazon has tried it.
I'm trying to help you out.
Amazon has tried it. Apple has tried it through the theaters, and it works.
I don't think he got what I was talking about.
He did not.
He did not, right?
I just kept going.
Right over his head.
Keep going.
All of you obviously did. By the way, Netflix Prime to accelerate their content, reiterate overweight, $15.60 price target at Wells Fargo. FTAI, target goes to 230 from 190. BTIG reiterates buy today. Weiss, that's you.
Hey, look, we're talking about it more often, but talk about execution. They've been executing brilliantly. They have credit lines. $2.5 billion was the last deal about 6 months ago or so ago. I think they'll get another one, or that will be increased. And aviation, to Jim's point about Delta and others, I just think the stock keeps moving. It's had a monster move so far, and I'm glad to be a shareholder, but I'm not ready to sell this yet.
Okay, thank you. Ulta, target to 590 from 520. Outperformed tells the advisory. Joe, you own that. And Spotify also has some new services that we're doing both at once. Ulta first, then Spotify. You own both of those.
Ulta has regained its technical momentum and its fundamental momentum as well. That's represented in the earnings. That's a recent addition to the ETF. Spotify, I've talked about this now over the last several years. Been a very strong winning position for us, and rightfully so. Why? Because what they're doing fundamentally, they're raising prices and they're not losing their subscribers. They're actually increasing premium subscribers up to about 275 million in that regard right now. They're cutting back on costs, and they're doing this in a very strong way that's allowing margins to lift somewhere above 30%. So in all of the cases that we're citing here in this block, Netflix, Spotify, Ulta, what are you talking about? You're talking about companies that are executing, and you're talking about that shareholders are rewarding them for that execution, and it's represented in strong momentum.
Okay.